I don't think I really need the mic, but I'll turn it on anyway. As we begin our first meeting of the 2024 session, I'd like to start first by having each member to introduce themselves. And starting at my far right, Senator Pillion.
Good morning. I'm Todd Pillion, representing the 6th Senate District, Lee, Scott, Wise, Washington, Russell, Dickinson, Buchanan, cities of Norton, and cities of Bristol. Yep.
I'm Bryce Reeves. I represent the 28th District, which used to be Senator Stewart's district, which is Spotsylvania, Orange, Culpeper, Greene, Madison, Rappahannock, and Fauquier counties.
Morning, I'm Richard Stewart, and I represent the new 25th Senate District, which is the 5 counties of the Northern Neck, half of Spotsylvania, Essex, Caroline, Middlesex, King William, and King and Queen.
My name is Mark Obenchain from Rockingham. I represent the central Interstate 81 corridor. I represent Page County, Rockingham County, Harrisonburg, Augusta, Highland, and Bath County.
Ryan McDougall. I represent God's country. That's Hanover, New Kent, a little bit of King and Queen, Gloucester, Matthews, and James City County.
Thank you. And now I will start to my far left. And after we have completed this introduction, then I'd like for staff to introduce themselves, if you don't mind, folks.
Thank you, Madam Chair, and good morning. I'm Ghazala Hashmi, representing the new 15th District, which is parts of City of Richmond and Chesterfield County.
Good morning. I'm Senator Jennifer Boysko. I represent the newly created 38th District, which is Northern Fairfax County, Herndon, Reston, McLean, Great Falls, Wolf Trap, and parts of Vienna and Falls Church.
Good morning. I'm Jeremy McPike, Senator for the still the 29th District, and representing parts of Prince William and North Stafford.
I'm Scott Serval. I represent the 34th Senate District, and I used to represent 3 counties and 3 towns. Now all I have is Fairfax.
Good morning. I'm Senator Barbara Favola, and my newly drawn district now is completely contained within Arlington County. So I gave up parts of Fairfax and Loudoun, and I only represent Arlington. Nice to be here.
Good morning. Adam Eben, representing the City of Alexandria, as well as portions of Arlington and Crystal, Pentagon City, and Arlington Ridge, a portion of that, and also in Fairfax County, representing parts of Bailey's Crossroads, Skyline, and Seven Corners.
Good morning. Mamie Locke, representing all of the City of Hampton and half of the City of Newport News.
I'm Creed Deeds, the 11th District, which is Albemarle, Charlottesville, Nelson, and Amherst, and a corner of, or part of Louisa. Everything between mile markers 99 and 143 on 64 on your trip down to Richmond.
And good morning again. I am L. Louise Lucas, representing the 18th Senatorial District, which now comprises only Portsmouth and Chesapeake. It used to be 12 localities. And I am the new chair of Senate Finance and Appropriations, and I'm so excited I can barely contain myself this morning. And I'd like for staff to introduce themselves, please.
April Key, Staff Director for the committee.
Tyler Williams, Analyst with the committee.
Thank you. As we begin our first meeting of the 2024 session, I would like to impart some guidance and directions on the important work of our committee, and especially that of our subcommittees. First, there are approximately 5 weeks before we report the budget. I would ask that members commit to working towards adopting a budget that all committee members can support and that focuses on sound policy decisions for the future. Next, by the end of this week, all of our subcommittees will have met at least once this year. We're working towards identifying the critical issues in each area, and we need to continue that dialogue. Subcommittee members should have comprehensive knowledge of matters before your subcommittee. Please work with staff members on any needed research and guidance. Subcommittee chairs, please make sure our staff know what you need to get your job done as your chair. And please conduct inquiries of agencies as necessary to fully understand the administration's position on spending proposals or other amendments in the introduced budget. For your reference, I have redistributed the staff assignment list with the areas of responsibility for each. Turning back to committee organization, generally bills will not be assigned to subcommittee except in the case where public hearing beyond the capacity of the full committee are appropriate. Where bills are complicated and the perspectives of a subject area subcommittee will facilitate further understanding. Where revenues or resources are impacted and need to be reflected cumulatively against the introduced budget, and in instances where the subcommittee must consider the totality of such bills as those with a Woodruff impact. Otherwise, I would try to limit the number of bills assigned to your subcommittee and so that you can devote maximum time evaluating your specific areas of budget development. Additionally, guidance is included in the organization materials in your notebook. Please review those materials and make note of the committee procedures for acting on referred bills and guidance on the consideration tax incentive bills. On those topics, I will note that I expect members of the committee to identify sources of funding when considering tax credit and or other large proposals. I will also highlight 3 items under the procedures for acting on referred bills. First, our policy dictates that last-minute substitutes where analysis has not been conducted will be heard at the following meeting. Second, if a member asks that their scheduled bill go by for more than once, there is no assurance that the committee will have the opportunity to take any action other than carrying the bill over or striking it from the docket. Get that? Third, in the past, this committee has added the clause to bills. I would ask that you use the clause sparingly or not at all, since it extends budget development and delays difficult finding decisions of a later date. The committee meeting schedule will remain the same as in prior years. Attendance at all assigned meetings is expected, as your role is important to each. I will continue to be briefed by staff weekly, and I will spend a great deal of time evaluating bills and recommend certain actions for your consideration. I want to also note that we will continue the practice of not hearing additional public comment when public comment has already been taken in the committee of origin. Thank you in advance for your hard work and dedication to the committee during the session. If there are any questions, I would ask the Secretary of Finance, if there are no questions, is he there? I would ask the Secretary of Finance, Secretary Cummings, to brief us on the December revenue report. I couldn't see you over my...
I'm sorry, I was focused on something and not listening very well. Thank you, Chair Lucas. A pleasure to be here and give you the monthly revenue report. I'd say big picture that we feel very good about where we are. We are modestly ahead, good position to be in at this point. Our outlook has not dramatically changed what we think should be built into the revenue forecast that we're still working with. We still have noise that's occurring because of the PTED issue, and I'm going to touch on that here very quickly as we go through this. I know we have a lot to get to. So, you put up the slide, thank you. So for the month of December, we're slightly higher than last December, 0.2% up year over year. December income tax collections, excluding refunds, grew by $84 million, or 4.2%. Year to date, more relevant numbers to focus on. General fund revenues increased 7% versus prior year, and individual tax collections up 6.4%. Corporate income tax up 14.8%. Interest income up 185%, obviously enjoying the benefit of high balances and higher rates. Sales and use tax collections are actually down 1.3%, and insurance premiums are down 11%. But I think more importantly, compared to the forecast that we established in December, and Bear in mind that that forecast was based upon the last actual month of October, so we now have 2 new months that are in the forecast. We have revisions in this based upon the recommendations of the Joint Advisory Board of Economists and the GACR, and general fund revenues are projected to decline by 0.6% for the fiscal year 2024 compared to the 5.5% decline that was assumed in the amended budget enacted last September. Compared to that revised forecast and accounting for monthly variations in tax collections, year-to-date revenues are ahead by $363 million. However, to try to tackle the PTED issue, if you exclude non-withholding and refunds, we're actually ahead by about $86 million, a variance of only 0.7%. So I go back to the things that we have confidence we can project accurately, given the PTED noise, which I'll talk about. We're 86 million at a minimum, and we think probably a bit more because within the non-withholding, we do think that core non-withholding capital gains passed through entities are performing at a higher level than we expected. But I think $86 million is a number that we can assume is the base of the degree to which we are ahead of our forecast. So the forecast included in the governor's proposed amended budget anticipates still a mild recession that starts in the fourth quarter of our fiscal year. We know that's conservative, and actually, since this has been developed, I'd say that the talk out there by just about everybody is increasingly optimistic, and that they're anticipating 4 to 6 rate decreases over the next 12 months. We still believe that there's enough out there that we should be worried about, that inflation is not clearly taken care of at this point, but more importantly are these items that are below that are potential risks out there, and we just think for the base, as we should do our job in making sure we have a budget that is prepared for some unknown circumstances, that we should maintain our conservative stance. Obviously, we'll continue to watch this as we continue to progress and revisit in February as well for revenue reforecast. The temporary budget deal is first and foremost. I think there's kind of day-by-day encouraging signals, discouraging signals, and the first wave of that we will hear at the end of the week about how we do on the first chapter of the deadline that's they have to deal with. Recent economic data has been strong, I think stronger than expected generally. There's a few mixed signals, but they continue to outperform as is reflected in our numbers. Very quickly, is the economic data we've been watching. GDP was brought back down a bit for the third quarter, a revision that was down, still up 4.9%, which is pretty stunning. And you can see on the right the Q4 expectation that there's a range here of 1.5% to 3.6%, kind of centered around a 2.5%. So coming back a bit to earth on where this should be, the expectations are. Still solid. This chart, left side retail sales, right side credit card delinquencies. Again, solid on the retail sales number for the month of November. Bear in mind that sales data is for the prior month. So December numbers that we now have in this is reflecting November sales. On the 20th, we will be getting retail sales for December. That's going to be critical. November was not super strong versus expectations, but we think we're going to have a bigger December because a lot of consumers deferred purchases to much later than they have in the past, is what economists are expecting. And then credit card delinquencies are clearly continuing to trend up, and a sign of weakness that we obviously need to watch, that the pandemic funds have been depleted and some people are not able to meet their payments. Labor market, left-hand side is job gains, and then job openings per unemployed person. This is consistent with the last several months, that the job gains are still positive, obviously, but fairly modest. They've trended down over time. And then the job openings per unemployed is still at 1.4, but bear in mind, back in pre-pandemic, that was a 1.2 number. But it's starting to get back to where we were. And I think we continue to hear this from people that that companies are taking down their job openings, and I think the labor situation where we had serious supply-demand issues, imbalance, have clearly gotten better, which is going to be reflected in some of the wage gains as well. With respect to Virginia, pretty much the same story that you see here on the left side is jobs added. It's up 6,200 jobs for the month of December. Positive but not very meaningful, not a big takeaway there. And the seasonally adjusted unemployment rate increased by 0.2%, but still extremely tight. It's extremely tight at 2.9%, and a significant discount to the national rate, which has been consistent, pretty consistent for January for Virginia throughout history. CPI is clearly trending down. I think that the number that we just experienced is a bit higher, of 3.4% from a year ago. There's good relief in a number of critical areas, but housing continues to be a challenge in terms of that, and that's a significant number in the overall figure that we're watching. But headline CPI rose 0.3% in December, which was above the consensus of 0.2%. Wage growth is slowing. That's obviously a reflection of the balance coming into the supply and demand of jobs. I think that one of the significant points that you will hear are hearing already is that it's the first time in a long time that wage growth has exceeded CPI. So real wages it's kind of tipping into that positive for real wages. That's obviously been a huge problem for the last two years, that costs of groceries and other gas and other things have significantly outstripped wage growth. And so this is a positive, very positive signal that the Fed will watch as well. I think we know this painful chart here, 11 increases in a very short time, historic levels. But now, since July, there have been no further rate increases. As I said, if you do follow the just daily dialogue, that people have gone from thinking they would stay flat or down, get one or two decreases over the course of the next 12 months. It's now as many as 6 coming out of certain economists. And we definitely are not going to count on that in terms of our budgeting process. We think that's overly optimistic, but that's where the market is. And you've seen the reaction in the equity markets with that very optimistic outlook, which we think is probably ahead of reality, but that's our opinion. And it is Gaker's opinion as well, by the way, much more conservative stance. So to the numbers here, and I'm going to focus on year-to-date. 1 month is not that significant. December's not a terribly huge month. But if you look at to the far right, fiscal year-to-date, you can see the actuals projected and variance that we are ahead. This is versus forecast. We're ahead by $363 million, the number that I mentioned at the beginning. But if you do take out non-withholding and refunds, which is where all the noise is, it's the $86 million. And again, I consider that to be a baseline of our beat. We do think it's probably better than that, but unfortunately, we do not have the ability to track just core capital gains and core pass-through entity results. Our sense is from our team, Charles Kennington, the revenue team, that we are ahead there, so it's a minimum of $86 million. You can see year-to-date sales and use taxes that it's actually down 0.6%. And if you look at the corporate income tax, it's 1.3% versus forecast. Up to the top, withholding 2%, which tells you this is versus forecast. We have a good forecast on the core economically driven contributors to revenues. So we feel good about our ability to look at this going forward. So the PTET, adjusting for PTET, you can see here again to the far right that total GF revenues are up 7.1%. Am I in the right chart here? Yes, I am. Sorry. 7.1%. And if you go down below to adjusted revenues, withholding is up 5.1%, non-withholding 8.8%, refunds 35%, which just shows you what's going on year over year within PTET again. And what continues to happen is variations versus our projection where we have a more gradual increase in the degree to which the taxpayers are basically paying into the system on adjusting their withholding as opposed to claiming refunds. And what's happened here is there's been a bit of a shift in behavior, which if you see here on the next page, there's a decline here in December that we still are not matching what's in our forecast. And what we are seeing is that more people are not filing to get their cash. We assumed that was going to be at a faster rate. Would be logical. I would file for my refund so I can get that and start to collect my interest on it. But that continues to be at a slower rate than we had put into our original forecast. A couple of the core slides we've had over time on two of the key areas. Withholding collections do continue to grow. You can see our official forecast is a 0.5% for the year, and we are unadjusted year to date at 2.1% plus, and the recent months have actually exceeded that. So we feel good about withholding as the job market continues to stay solid. And then if you look at sales tax collections, it's a bit of a different story. We do have a forecast of down 4.6%, and we're trending in that direction. We're still ahead, but sales have been a bit off, you can see here, versus the forecast in the first few months. So looking ahead here, we're getting into some important months. January is a critical data point, and what's going on is that withholding monthly and quarterly filer their returns are due. Non-withholding at December and January are big months for collections of non-withholding. They have until January 15th to submit their fourth estimated payment for 2023. Sales is going to be very important on the 20th. That is due for the month of December, so it'll have very good insight on the strength of the consumer through holiday sales. And then for corporate, the fourth estimated payment is due from retailers and other companies. And that concludes my presentation. I'm happy to take any questions.
Thank you, Mr. Secretary. Are there any questions from any member of the committee? Seeing none, now we will turn to the Senate bills on the agenda. Thank you, Mr. Secretary.
Thanks so much. Yep.
First, I would like to ask for a motion to re-refer Senate Bill 76, and that is Durant Bill to Education and Health.
So moved. Second.
It's been moved and properly seconded that the bill be re-referred to Senate Education and Health. All in favor of that motion, please say aye. Aye. Opposed, same way.
We just have a recorded vote.
Oh, that's right, recorded vote.
Ayes 15, noes 0.
Ayes 15, no 0. The bill has been re-referred to Education and Health. Thank you. Next, both Senate Bill 58, Craig, and Senate Bill 64, Durant, deal with annual retail sales and use tax holidays, as does my bill, Senate Bill 116. We have discussed incorporating Senate Bill 58 and 64 into Senate Bill 116 with the other patriots, and they have agreed. And I'm now going to turn it over to Senator Deeds to make the motion.
I'm going to request that somebody make a motion to incorporate Senate Bill 58 and Senate Bill 64 into Senate Bill 116.
So moved.
Second. Okay, we've got a motion and a second to incorporate. Is that a recorded vote? Yes, sir. Okay. All in favor of incorporating, vote green.
Ayes 15, noes 0.
Okay, now that we've done that, we've got a committee substitute for Senate Bill 16, and I would like for staff to explain that substitute, please. I guess we've distributed it, or is it electronically available? It's electronically available.
Madam Chair, Senator Deeds, the substitute does two things. At line 24 in the introduced bill, it includes language that specifies the Energy Star qualified products that we allow for the sales tax holiday exemption under current law. And then in the second enactment clause, it adds a sunset that would take the sales tax holiday through the August 2029 season. So it expires in 2030, but it would cover the August 2029 sales tax holiday.
Effectively, we codify the sales tax holiday for the next 5 or 6 years.
Madam Chair, yeah, that's correct, Senator Dees.
Okay, we've had a motion to report the substitute. Is there a second?
Second.
Okay, motion and a report. Are there other motions? Is there any further discussion? A vote green is a vote to report. I'd ask you to open the roll.
Ayes 15, no 0.
Okay, the bill's reported. Madam Chair.
Thank you, Senator Deeds. If there are no other business to come before the committee, believe it or not, we're ready to adjourn. Thank you, committee members. And I do have to do this.
The Senate of Virginia, Richmond, Virginia.